What's up everybody, Jaspreet Singh here, and in the most anticlimactic turn of events, the Federal Reserve Bank raised interest rates again, this time by 75 basis points, aka 0.75%. This is the same rate hike that they did last month, which last month was the biggest rate hike since 1994. So it is a pretty big rate hike. And as soon as the Federal Reserve Bank did that, markets rallied, which is really interesting because typically when the Federal Reserve Bank raises interest rates, you would expect the market to go down. Because when you raise interest rates, it makes borrowing money more expensive. It makes getting a mortgage more expensive. It makes it more difficult to buy a car, more expensive to buy a car. It makes your credit card debt more expensive. It makes it more expensive for businesses to borrow money. So why did markets rally? Well, maybe because many people were expecting or thinking that the Fed might raise interest rates even more aggressively. But we don't really know why. I mean, there's a couple other issues that's going on between the recession and inflation that I'll get into in a little bit in this video. But I actually wanted to make this video yesterday, but I'm in New York right now. I got into New York really late because I was going on my flight and the flight got delayed due to some brake issues. So that caused a huge delay. Then there were some issues with the Airbnb that I was supposed to stay at. So a bunch of issues happened, so I got delayed. So I apologize for this video being late. However, let me first talk about what the Federal Reserve Bank said, because I talked about this on my Instagram yesterday, but there were three main points that the Federal Reserve Bank talked about during their meeting. First, they said that inflation is significantly higher than what they expected it to be. So inflation is still high. Second, they said that the economy is strong, but it is slowing down more than what they expected. Third, they said that consumers, regular people, are, quote, very strong. So it's like the recession, or the economy rather, the economy is slower than expected. Inflation is hotter than expected, but consumers are stronger than expected. Kind of a weird thing that they said. And let me give you a couple quotes, because what Jerome Powell, the chairman of the Fed, said was, quote, as the stance of monetary policy tightens further, meaning as they raise interest rates further, it will probably become more appropriate to slow the paces of increases while we assess how these policy adjustments are affecting the economy and inflation. AKA, right now we are raising interest rates to fight inflation, but before we keep raising interest rates in the future, we need to assess how these interest rate hikes are affecting the economy. The reason why this is important is because, well, raising interest rates affect the economy. Raising interest rates slow down the economy, and we're already seeing the economy start to slow down. Now, if you ask the Federal Reserve Bank, if you ask the White House, President Biden and their team, they will tell you that our economy is very strong. And although we might see a quote-unquote recession announced today is when the second quarter economic report is released, even if it says that we are technically in a recession, according to the Fed, according to the White House, it's not a real recession. So essentially now what they're doing is changing the definition of a recession to better fit their needs. I'll explain why the Fed said that even if we see a quote-unquote recession, that is not a real recession. But just know that what he's saying now is if we do see the economy slow down, we might change our policies and we might start inflating again. So that's kind of what he hinted at in the beginning. But then he went into the strength of the economy. He said that job gains have been, quote, robust in recent months, and the unemployment rate has been very low. He said it's near record lows right now. And at the same time, inflation is elevated, and this is causing a lot of pain for consumers. And the other pain is due to supply chain issues and issues with energy costs. And so what he's saying is consumers are struggling because of these higher costs, but a big reason for these higher costs are supply chain issues. But consumers really aren't struggling that bad because, according to him, the labor market is so strong and households are, quote, very strong. So it's kind of a weird situation where he's saying that the economy is slowing, that the demand for jobs from businesses, like businesses hiring, is slowing. Inflation is still very high, but the consumer is strong. Now, one thing that I will agree is that I do think that in the coming months, inflation will come down. I think now that energy prices have come down off of their highs a month ago, I do think we'll see inflation come down. But I don't think that means inflation has just gone away. I mean, that's some inflation, but there's still so many other aspects to inflation. And that is going to take a real fight on inflation to get it to come down. And this is where, when the Fed right now is already hinting at they might change their inflation policy if the economy starts to slow down, that's kind of worrisome because, if you think that you have won the fight on inflation, when inflation comes down to 5%, well, that's really not a win. And if you start stimulating a slow economy when inflation is still high, well, that's just going to create more inflation. Sure, it'll create a boom in the economy, but then inflation gets higher, which hurts the average person. So these are the things that you want to pay attention to, which brings me to the topic of a recession. Because a couple of days ago, I talked about this on YouTube yesterday, but the White House came out and said that a technical recession isn't a recession. So essentially changing the definition of a recession right before the data comes out as to whether we are in a recession or not. So kind of an indicator that maybe we are in a technical recession, but they're essentially kind of giving you this foreshadow that, hey, if we are in this technical recession, it doesn't mean we're actually in a recession because our broader economy is so strong. Well, that's exactly what Jerome Powell, the chairman of the Federal Reserve Bank, said, which is interesting because the Fed is supposed to be independent of the government. So traditionally, the definition of a recession is 2 quarters of an economic slowdown. So 6 months of GDP economic slowdown, that's a recession. But now what he's saying is, quote, think about what a recession is. It is a broad-based decline across many industries that's sustained more than a couple of months. That doesn't seem like what's happening right now. And so what he's saying is, sure, maybe some industries are slowing, but we're not seeing a broad-based slowdown in the economy. And then he also said that he doesn't think that we are in a recession right now. Now, if later today it comes out that we are in a recession, it'd be very interesting because one day prior to the economic report coming out, Jerome Powell, the chairman of the Federal Reserve Bank, said publicly that I don't think we're under a recession. And if we do happen to be in a recession, it's not a real recession. So just a very interesting way to describe things. And this brings me now what's going on with other parts of the economy, things like Meta, because Facebook, which is now Meta, gave some very interesting insight about their opinions about the economy. Now, before I talk about Meta, I do want to let you know that if you like to stay up to date on what's happening with news like this, you have to check out Market Briefs. Market Briefs is the easiest way to stay up to date on what's happening in the finance and business news. It is a free financial newsletter that I created. We covered this inflation story and a number of other stories in Market Briefs. You can read it in less than 5 minutes every morning. And it'll keep you updated on the stock market, the real estate market, the crypto market, inflation and what the Fed is doing, and the global economy. And I promise you, you're going to look forward to reading Market Briefs every morning because it's so easy to read and it's so much fun to read. Our team is so amazing and they're so creative and they make Market Briefs so fun, and we give away so much free stuff just because you read it and you refer your friends, and it's a fun newsletter. Okay, so join Market Briefs. It's free. I'll put the link for you down in the description below. So Mark Zuckerberg came out and he said that the economic downturn is here right now. And the reason why he says that is because Facebook is an advertiser supported business. The way it works is people use Facebook and then businesses pay money to Facebook for advertisements. And so a recession doesn't really hurt people using Facebook. In fact, it probably increases the amount of people that are using Facebook because if you get laid off, you're going to spend more time on your phone, more time on your laptop, and you might be spending more time on Facebook. But that doesn't really help drive more revenue if businesses aren't paying money. And so what he's saying is they're already seeing a slowdown in advertising. And we've seen this across the board. Even here on my YouTube channel, I have seen our advertising revenue get hit pretty hard. Not like super hard, but maybe 10 to 15, 18% drop in advertising revenue. So what that means is, for the same number of views, the amount of money that we make from advertising is going down. Now, I'm not saying this for you to feel bad. I'm just saying this so you understand what's going on. And same with sponsors. I deal with a lot of sponsors, a lot of companies, and many of them are pulling back on advertising. They're just cutting their advertising budgets. A lot of startups that I know and work with have done a lot of layoffs. And now Mark Zuckerberg at Meta is saying the exact same thing. He's saying that Meta is already seeing the effect of pretty much a broad-based slowdown in advertising spending. And there was an interesting article that came out a day or two ago where it said that Meta, the executives, haven't said anything about layoffs. And they're kind of saying that don't worry about layoffs, but the employees at Meta have pretty much factored in and agree that Meta is going to lay off about 10% of their entire workforce. And I've actually talked to somebody who works at Meta, and I asked him the same question. I said, what's going on with layoffs? And he's like, well, no one's really said anything, but there's this common consensus amongst all of us that work at Facebook, at Meta, that there's going to be layoffs. So it's like the people there are just waiting for the executives to announce it, but the executives haven't said anything yet. So kind of an interesting thing going on. And you can kind of see the dynamic between what private companies are saying and what our government and the Federal Reserve Bank are saying, because they're saying everything is fine, don't worry, we got this under control, inflation is on its way down. And yeah, probably next month we're going to see a big reduction in inflation, and you might see a lot of people claiming that the fight on inflation is over. But this is where you want to be very cautious and understand what's going to come next, because the fight on inflation is not over. It's still going to be high, and that's where you have to pay attention to now, the economy versus inflation. I talk about this a lot on our channel. Watch some of my other videos if you don't understand what I mean, but this is the things that you want to pay attention to, and we will keep keeping you up to date on market briefs. So if you haven't joined yet, make sure you do that. If you enjoyed this video and you want to see why we might be entering a once-in-a-lifetime opportunity to build wealth and what you can do to capitalize on it, I already made a video covering it, and you can watch it by clicking that button right over there. Thank you for watching, and as always, keep hustling. When the 2020 pandemic happened, that was when the stock market and cryptocurrency was the biggest opportunity. Next time,